Welcome everyone. Today we're going to be talking about Costco Wholesale Corporation. We're going to be looking at their stock and seeing if it is a good investment for your future. We're going to be talking about the history of the company, some insider trading, the annual report, and comparing Costco to some of their largest competitors, all in an effort to leave you with one recommendation of whether you should buy, sell, or hold Costco stock. So Costco, I just want to make sure that we are all on the same page when we're talking about Costco. It is a membership-based wholesale store, so you need to purchase an annual membership to be able to even walk in the doors and purchase items. And their business model is by allowing customers to purchase items in bulk and pass that discount on directly to the customers because Costco receives a discount by buying in bulk, so will the customer. So Costco started out as two completely independent companies. In 1976, Price Club was founded by two brothers. They opened up their first store in San Diego, California, inside a series of old airplane hangars, and that store is still there today. It's a Costco today in San Diego, California. And then the Costco that we know opened their first store in 1983 in Seattle, Washington, and they were the first company to grow from $0 to $3 billion in sales in less than 6 years. So they really hit the ground running with this wholesale bulk shopping kind of area that was really new at the time. In 1993, they merged with Price Club, which was actually after Price Club received an offer from Walmart to merge with their wholesale store Sam's Club. Price Club rejected that offer and ended up finding a much better match in Costco. Immediately after merging, they had 206 locations and $16 billion in annual sales. And here we are today, about 26 years later. We have 760 warehouses worldwide, $138 billion in sales as of the end of their last fiscal year, and more than 94 million members worldwide. So now I just want to briefly go over the different services that Costco provides because while they are a wholesale store, you can do so much more at Costco than just buy your groceries. They sell clothes, they sell beauty items, you can get your tires replaced, you can get your car repaired, you can fill up your car with gas, get your prescription refilled, buy a new pair of glasses, book a vacation, get lunch, get your photos developed, etc. And you can also do all of this online through their e-commerce website, Costco.com, which is something they've really been investing in over the last few years as they try to compete with retailers who are 100% online, such as Amazon. So Costco is really a one-stop shop for a variety of services. So now we're going to begin getting into executive compensation a little bit. So we're going to use Craig here as an example. He's our president and CEO to discuss the structure of C-level executive compensation because this is pretty much how it works at all public companies. So 2017, for example, I was able to find a specific breakdown of his salary because it's not like this is just his income. This is an hourly rate that he is receiving. He receives a combination of a salary, a bonus, other compensation, and stock options and awards. So for 2017, just to give you the numbers, he had a base pay of $715,000, $192,000 annual bonus, about $200,000 in other compensation, and the vast majority of his compensation, which was $5.5 million in stock options and awards. And that is pretty common across all public companies. All the other executives that we're going to discuss are pretty much the same. So next up, we have Richard A. Galanti. He's an executive vice president and CFO. All the other executives are executive vice presidents in addition to their C-level title. His 2017 compensation, you can see about a 10% growth from 2017 to 18, and he's still making a good living as the CFO of Costco. Joseph P. Portera, another executive vice president and chief operations officer of the Eastern and Canada divisions. So here's a picture of him. He is on the right, and on the left is actually one of the original Costco founders, Jim Sinegal. Paul Moulton, another executive vice president and a chief information officer. So again, 2017 to 2018, a little under 10% increase from his salary there. And then we have James Murphy, our last executive vice president and chief operations officer of the international division. So as you'll notice, the chief operations officers, we had a different one based on each demographic and geographic area that Costco is expanding to. It just makes sense to break up the executives that way so that each officer has a different geographic area that they're in charge of and can really focus on. So now we're going to briefly discuss some insider trading. So As you can see on the left is a screenshot from the Bloomberg terminal. It does look like we've had a lot of people selling, but over here, this little 6-month summary, you can see that the net amount of shares that have been purchased is higher than the number of shares that have been sold, which is a good sign. And insiders, just so we're all clear, that can be either a C-level executive. So we have some familiar faces that we just discussed. You know, we have Craig Jelinek there. We have Joseph Portera. We have, who else? Paul Moulton. So those are all people that we just discussed. In addition, we have board of directors members. So Susan Decker, she's on the board, and they are considered insiders as well. So now we're going to go a little bit over the annual report. Net sales increased, revenue from membership fees increased, always good things. They declared a ton of money in dividends. They were able to repurchase a lot of their shares. That's going to make all the per share metrics a lot better because the number of common shares outstanding has gone down. That's the denominator. Denominator goes down, overall fraction goes up. That means good things for the dividends per share, earnings per share, etc. 2019, they'll be expanding to China. E-commerce, as I mentioned before, it grew over 30% this fiscal year. They are really focusing on investing in transportation logistics, fulfillment centers. They began offering 2-day grocery shipping. So they are really trying to make sure that they remain a strong competitor in the e-commerce market. And employees, you know, they continue to focus on the employees that make Costco the company it is. It was rated as one of the top best rated workplaces among the Fortune 500 in 2018. And they used the tax savings from the Tax Cuts and Jobs Act to raise employee wages across the board. So the minimum wage at Costco is now $15 an hour, which is amazing. So these are the companies that we're going to be looking at for financial comparison purposes. I do want to note that I feel like a lot of people, when you think of Costco's competitors, you tend to think of BJ's and Sam's Club because they are the other two big box stores that exist today in America. But Sam's Club is a subsidiary of Walmart, so we're including Walmart, we're basically including Sam's Club. And BJ's only returned to the public sector after being a private company in July of last year of 2018. So there's really not much value we're going to gain from including them in this analysis. So for those reasons, our competitors, the three that we're looking at is Target, Walmart, you know, pretty much everyone knows what they are, and Big Lots, which is primarily a discount furniture store. So here we have the stock price comparison. So this is a 5-year stock price comparison across our 4 Costco and our 3 other comparison companies, so 4 companies total. As you can see, you know, they were all pretty close to each other from about 2015 to 2017-ish. Then there was a little bit more of a spread, and 2018 is really when you can see all the 3 companies kind of staying where they are or even dropping, and Costco really taking off. Big Lots is the only company that had a negative stock price change over the last 5 years. Walmart and Target pretty much neck and neck at 32% and 29%. And then Costco, I mean, they're seeing a 3 times percent return over the closest competitor, Target, at 111%. So Costco stock has really been growing, and it doesn't look like it's going to stop anytime soon. So now we're going to get into some financial metrics. We have our price to earnings ratio. This is what we typically look at when deciding whether a company is over or undervalued. So for Costco, 32, it's a little high, not, I would say around 50 is when we're looking at a company and we say, wow, they are seriously overvalued. I'm not going to buy it anytime soon. Maybe 15 to 20 is probably a good number. So you definitely wouldn't hurt to wait on Costco a little bit to drop, but it's not like it is absurdly outrageously high right now. Target and Walmart are both in a pretty good spot. Big Lots, 10 is not a great PE ratio, so we definitely want that to go a little bit higher. The dividend yield, Costco is really lacking in this area, so it looks like they're trying to work on it. They declared $939 million in dividends last year, so hopefully they work on this. The bond rating, I put the little scale of the different ratings from Fitch over there on the left so that we can see where these companies are, but the order of the bond ratings is going to go Walmart is first, and then Costco is behind them, then Target, and then Big Lots is really their second from the bottom rating. So they are not doing too hot. And then the beta, which compares the risk of this stock to the overall market risk. So Costco, Target, pretty much about as risky as the overall market. Walmart is a little less risky, and Big Lots is way more risky than the market. So you buy Big Lots stock, you're taking a pretty big risk, but you also have that nice 3.1% dividend yield. So, you know, it's a trade-off. Some more metrics, we have the growth of various per share metrics that we're looking at. So our earnings per share, dividends per share, and book value per share. So these were total growth over 5 years, 10 years, and the future up to 2022. That is the number that I was able to find. So as you can see, Costco earnings per share, looking at pretty good growth. It looks like it's going to drop in growth, is what people were expecting in the future. Not sure how I feel about that. I feel like Costco is probably going to keep growing at the rate that they have been. Target, people expect to jump. Walmart, it's been on a little bit of a downturn, but they expect that it'll come back. And Big Lots, people are expecting pretty bad things from. Dividends per share, you can look at these percentages. Costco is going to be increasing. Target will be increasing. Walmart increasing. Big Lots, they actually only began declaring dividends in July of 2014, but since that declaration date, it's grown 3.16%. So people kind of expect it to be about that same number. And then the book value per share, Costco has been growing pretty steadily, not too much, but this number doesn't fluctuate nearly as much as we can see the earnings per share or dividends per share were. So all of these numbers are positive. All of them are growing for all of the companies, and that is all good things. Then we're going to talk about the return on equity and capital structure. So return on equity, that is kind of like a profit ratio. It talks about our ability to meet long-term obligations, the measure of security for long-term creditors and investors, etc. So the ROE was 26.59 in 2018 compared to 23.44 in 2017. Those are both pretty good numbers, and we like to see that number going up as it is for Costco. Their debt structure, so the long-term debt that they have is currently at $6.557 billion, but the current portion of that is only 90 million. So they're pretty much set. They'll be able to pay that off no problem, especially after we look at the debt to equity ratio, which is a measure of their financial leverage. So at 0.47, that we're really comfortable with that number. We don't think that Costco has way more debt than they'll be able to pull off. Yeah, so these are all good things. They're going to have some articles and press releases. So Costco, as we discussed with the annual report, raised the minimum wage to $15 an hour. The Wholesale Corporation report for their March sales results, that's a press release. Pretty much a company issues a press release to announce monthly earnings, quarterly sales, etc., any events in the company. The one that I really do want to highlight is this one about Costco emerging as a consumer favorite ahead of Amazon, which was published by Bloomberg at the end of February of this year. This really goes to show that Costco is continuing to be a competitive force in the e-commerce industry. Amazon has been at the top of this list for the last 5 or 6 years, and for Costco to knock them down says really positive things about Costco's growth in the e-commerce world. These last two are about the value of Costco stock, as we discussed when looking at the various financial metrics and the PE ratio. Some people think it's overvalued. They think that if you buy it now, you're purchasing it for a higher than it's worth. You might be better off waiting for the price to go down. We're going to talk about this a little bit later when we look at the financial analysts and what they had to say, but that is the articles and press releases in a nutshell. So now we're going to talk about the recommendations of professional analysts at various brokerage companies and rating companies. So the two companies that suggested you hold Costco stock, you neither buy it nor sell it, were Morningstar and the Ned Davis Research Group. And some of the reasons they cited is that they felt that Costco stock is currently very overvalued and they're not really sure of its ability to keep up with the competitors in the long term when e-commerce is growing so much and bulk shopping is becoming less suited for the modern millennial consumer. We really don't have that many kids. We're having kids later. We don't need to shop in bulk as much as our parents did. Schwab, Argus, and Sharewise all said to buy. They think that the increase in e-commerce sales is a really good sign and that Costco is expanding to other areas while still maintaining a really strong hold on grocery, which is where they started. As you can see, not one analyst out of the 19 from Yahoo Finance that I found said that you should sell your stock. So they all agree that in the long term, stock price is going to go up. So you really can't go wrong adding this investment to your portfolio is basically the takeaway. So my personal recommendation was to buy Costco stock. I will say that this does vary a lot based on your personal preference. I don't think it's super overvalued. I think if you buy it now, you're still going to see a great return if you hold the stock long term. And I think it is a safe investment considering all that they are doing to maintain strong in the growth of the e-commerce market. However, if you did really want to maximize your profit, see if you can buy it for a lower price, it wouldn't be a bad idea to hold. So that is my opinion. feel free to reach out if you have any other questions or concerns regarding Costco stock.